Welcome back to The Dive. Russia-Ukraine tensions, its impact on oil and other commodities, palladium, platinum, gold, and what he thinks the underlying strength of the U.S. economy is, are the topics that our guest will deep dive into today. He's an internationally recognized technical analyst and founder of Technical Traders. Chris Vermeulen's joining us today. But before we bring you Chris's interview, do me one quick favor and just go ahead and smash that subscribe button for me, please. Hey, Chris, welcome back to the show.
Hey, thanks for having me.
Yeah, thank you so much for joining us again. Okay, so let's begin here. Truth Social, a new social media platform backed by former President Donald Trump, sat at the top of Apple's free app downloads this week. The company looks to complete the transaction with DWAC in the near term. Do you think the platform can challenge the current big tech players?
He's got a huge following at top of the charts. So, obviously he's going to get a ton of exposure. How can a president not get a lot of downloads? I guess it'll come down to, do people get traction on it? Do they like using it? Is it easy to use? And he's got a huge following. So it could definitely be a force to be reckoned with going forward. It's going to be very interesting to see how it takes over. I wouldn't be surprised if it becomes a market leader. He's got his mindset on it. He's got a big following, and people love to talk about politics and all kinds of stuff that's happened. I would think it might have a bit of a negative vibe to it. Like, there's always a lot of people bashing everyone's opinion. Doesn't matter what you believe in, right? So the fact that maybe Trump has that, he's been wild with his texts and his social in the past. So it's going to be very interesting to see how vocal. I'm sure people will be very vocal on there about their opinions, but it's going to be a force to be reckoned with, I would think.
All right, so let's move on here. With the Russian tensions ongoing and Ukraine imposing a state of emergency across the entire country, do you think that this will cause a temporary headwind on risk assets?
I do. I think if war breaks out, we're going to see stocks collapse. There's a lot of fear. We've already seen the stock market really move lower. It continues to kind of flounder down near these lows. The NASDAQ, the SP 500 are all very close to another 6 or 10% drop that could happen really only in the next couple of days, depending what happens. So war, I think, will put the world kind of on pause. You look at the Gulf War that happened. When war started, everybody stopped buying everything. They literally watched on TV in shock and awe and fear, and stocks fell. Oil and gold rallied. So it's going to put some pressure on the markets for sure. Nobody wants a war. I would have thought we're beyond this, where a country can go and take over another country. Like, it just doesn't seem right anymore. But it's going to shock a lot of people. A lot of people haven't lived through a war. There's a lot of people. It's going to be a real eye-opening experience and scare a lot of people.
Mm-hmm. So, in your opinion, how far do you think Russia could potentially go? And what would that do for oil and other commodities?
I don't know. I don't even like the thought about what could happen in war, how far they're going to go tactically and missile wise, or, violence wise. It's a real wild card. And that's what's going to, I think, spark the market. If a war starts, everybody's going to always think the worst. That's what you always wonder. Are there's going to be nukes flying, or, Scud missiles, all that stuff. So it's going to be scary. No idea how out of control it could get. I think it will be good for oil. I think it'll be good for gold. Gold mining stocks have been out of favor for so long, but this is like the perfect scenario, I think, for precious metals and miners. They're going to become kind of one of those hot pockets that I think no matter what the stock market does, we could see gold and gold stocks move higher, because we've got inflation, we've got war, we've got the end of what I think is a major stock market top coming in place. And that's usually when commodities do really, really well. In fact, energy and precious metals are the last sectors to come to life before the stock market tops. So the timing is perfect. Add war to that, it would add a lot of fuel to the fire for gold and oil going forward.
So there's also a huge run in both palladium and platinum recently. Do you think it's too late to get in?
I think commodities in general are going to continue to hold up really well. We're seeing, costs to get things out of the ground just keep climbing and climbing. I mean, we're going to see inflation, I think, continue to be here for a while. I think we're going to see commodities perform really well. I don't think it's too late. I think you want a basket of precious metals. You kind of want to spread it out because you never know which one is going to be the big mover. For all we know, it could be gold, it could be silver, it could be platinum or palladium. You don't know. So the nice thing is you kind of want to get a broad basket of those. And there's actually like ETFs that have a basket of all four of those particularly. So you just kind of ride the trend of the commodity of precious metals going higher. So I try not to pick one or the other. I always try to spread it out over different metals in terms of owning physical metals, because you really just never know. But they do look bullish. I think they're all going to continue to climb going forward here.
Mm-hmm. Do you think that you could pull up a gold chart and let us see what you're reading on it?
Daily chart of gold. And if we were to zoom way back in time here and look at the last major run up in gold, you can see we obviously had the 2008 pullback, 2009, it rallied up, and then we've been in this multi-year basing formation. We're looking at a 10-year kind of base, and we're finally in this new bull market. It started in 2019. We broke out, we've rallied up, and now we're seeing this beautiful, you could argue it's a cup and handle or it's a big bull flag pattern. Either way, it is pointing to much higher prices if we can break out of this bull flag pattern. There's a few more levels to break, but when we look at the overall price, now this is the most conservative forecast for gold, just based off the momentum off this low and the rally that we've had up and the power of the pullback. It is pointing to $2,600 for gold if this was to break and move to the upside. Now we need to see confirmation. There's a few things I like to look for. If we were to just zoom into this chart a little bit, we can get a couple different levels where we want to see gold start to break. And where we want to see gold break is going to be this high right across here, which is this 1920 area. We like to see two previous highs broken, two standout highs, ones that definitely, your eye goes to. When you've broken through two of those levels, that to me is when the momentum is shifted. There's enough power to break through two ceilings, eat up all that overhead supply. And so we have a little bit more work to go, but if gold can pop and break through 1920, the first pause or pullback is going to be a prime opportunity for it to go a whole lot higher. There is still going to be a resistance area right across these highs, somewhere around 1960, 1970. But overall, gold is on the cusp of breaking out, and there's a lot of upside potential. And you can see we're starting to see price pick up speed, where we've got some half decent volume down here picking up. So it's becoming a bit more of a defensive play. Stocks are going down, gold is going up. And, this is one of the latest, the late performing sectors. Just if you take a look at this table right here, you can see if we look at the stock market cycles, whoops, let me just zoom in a little bit here. Precious metals and energy happen. This blue cycle here is a stock market cycle. They're the two last key sectors that perform and come to life and lead the market higher when the stock market rolls over. The yellow line is the economy. The economy doesn't show topping signs till later. The stock market is usually smarter. It moves in when it sees, good times coming. It moves out before the bad times come, because investors can look forward and predict what's happening with sales and the economy. So we're in this phase here, this top of the stock market, where precious metals are just coming to life, and gold and silver miners, copper miners, base metal miners are all primed and ready and starting to break out already. And that's what we want to see, is those come to life. And then physical gold will usually confirm and break as well. So it's a pretty good scenario that's unfolding. Hasn't fully confirmed yet, but we are potentially days away from a big breakout in precious metals again.
Now, you've mentioned in one of your most recent blogs that the global markets may have recently focused too much on the US Fed and global central banks, while missing the underlying strength of the US economy. Under the current circumstances, what do you think the US market's strength is?
I don't think the Fed has a whole lot of control of what's going on. Because we're in this late stages of a bull market, the end I think is just around the corner. They want to start to raise rates for a few reasons. First of all, they want to try to counter inflation, satisfy people that they're going to make more interest to help counter the crazy high inflation we have. They say it's 7.5, but the reality is it's more like 30 or 100% over the last year and a half. It's crazy. And they also want some bullets in their chamber. They want to raise rates so that when the stock market does start to collapse and fall, and we go into a full-on bear market, they want to have some bullets in their chamber so they can say, "Hey, we're cutting rates by a quarter basis points," and the market loves that. So that I think they've lost control. They don't have a whole lot of what they're going to do, because I don't think a few basis points is going to make any real difference. If they raise them, it's going to hurt the market. And when they go to cut the rates a quarter basis points, I don't see anyone really getting too excited about it, and the market's surging over that. They just don't have any control at this point. It's waited way too long, and we're just out of control in terms of valuation for companies. And it's not so much just the Fed's fault. It's the overall cycle. It's how the world goes. It's how economics, it's how the stock market cycle goes. Really, it's just everything always seems to come together right at the end. And it always seems like people can point fingers, but really this is how price has always moved. We've seen the same cycle top we're coming into now. We've seen it happen over and over again in history. It's just the way the markets move, and people need to accept that. It's not because of war. It's not because of the Fed. It's just a cycle in life, really. So that's the way I see it as a technical trader.
Mm-hmm. Okay, Chris. So one more thing before I let you go here. Where are you seeing the most opportunity this year?
This year, I think is going to be the miners sector. It doesn't matter if it's gold or silver miners. The reality is base metal miners are actually performing exceptionally well. They're breaking to new highs. Copper miners are the next on the list. They're coming right up the line as a top, best performing sector. And then gold and silver miners are on the cusp of breaking out. And because where we are with everything going on, there's so many layers to this that support the precious metals sector. I think it's just a matter of time. I think gold miners like GDX, GDXJ, those are the leaders right now, other than the energy sector. But the energy sector, I think, is almost finished. It's had its move. It's had a beautiful run, crude oil. Energy stocks have had a big move, but they are showing signs of weakness. Whereas it's the complete opposite for precious metals. We're seeing miners just starting to break out and turn up. Physical bullion is on the verge of breaking out. So it's like a fresh sector. We've been waiting for this since more or less 2011 top, right? So finally, we're almost here. But the market has a great way of dragging things out, always longer than you anticipate. If the market doesn't shake you out, it'll wait you out. And we've been waiting and waiting. But I think the time is almost here. But it might drag out for several more months, but all the signs are there. I think GDX, GDXJ, gold miners are going to be the play of the year.
Okay, great. Well, thank you so much for coming on today, Chris, and sharing your insights with us. It's been a pleasure as always.
Hey, thanks for having me, Cassandra. Always a pleasure.
Thanks so much for tuning in today. We'll be back again tomorrow with the latest news and updates, so be sure to stay tuned by subscribing.